Morning, everybody. Happy Tuesday. Welcome back. It's hard to believe we've been doing these CEO blogs for almost 2.5 years. So I figured it'd be fun to change it up a little bit, do a video update. And also I figured, it's a great time to talk about some of the things that are going on in the market because there's a lot of fear out there. And I think a lot of us are looking for answers, trying to understand how to position ourselves going forward, given what we're seeing with inflation, with the Fed, with things that are happening in the economy and the stock market. So I want to talk about that real quick. But before I get into that, I wanted to also share with you a couple of exciting things that are happening today and tomorrow here at REM. First of all, we are closing on our Avenue 33 project in Atlanta, a beautiful 264 B-class property that we are super excited to be adding to the portfolio in Atlanta. We absolutely love Atlanta. It's a great market. It's performing extremely well, and we expect that to continue. So we'll be adding that to our Audubon deal that's up on the northeast side of town. So we've got that going on today. And then tomorrow we are actually rolling out a brand new deal in San Antonio. It's over 300 units. It's a C-class property in a B area, tremendous path of progress. It's actually about 6 minutes just up the road from our new development deal. And again, the reason we picked this area is because it's got a tremendous amount of upside. It is the last pocket in San Antonio that has not seen the tremendous rent growth because people have traditionally gone to the east side, the northeast side. So we are starting to see that growth on this west side property. So we're really excited about that. We're seeing the path of progress move in that direction. All the metrics are lining up. So we're really excited about that opportunity. We were able to also negotiate a bit of a price decrease, and we really feel like it's a phenomenal deal at this point. So some really cool things going on in the business side of things, but back to the economy and what's happening there. The main question, the main concern I think that most folks are having right now that I'm getting is, what's happening with the interest rates and how does that affect my investment thesis, my investment philosophy? So one of the things to remember is that if you are invested in multifamily and you're invested for cash flow, which we are, the interest rate typically means that the higher the interest rate means that there's typically inflation, which of course there is. And that inflation means there's rent growth, which there is. In fact, rent growth has been higher than inflation for the last year. So from an operational standpoint, from an investment standpoint, from a cash flow standpoint, we're actually in a very good position. Now, short term, that means that valuations are probably going to come back a little bit. Short term. So again, if you're in the business of buying a piece of real estate and a year or two later trying to flip it, probably not the best strategy at this point in the market. But for those of us that are long-term, buy and hold cash flow operators, this is a phenomenal opportunity to get into the market at a little bit of a discount, seeing rent growth, knowing that down the road that valuation is going to come right back, and getting a little bit of a discount. So we're big believers that this is actually a phenomenal opportunity over the next 6, maybe 12 months. It really depends on how long this lasts. I believe that we've already seen inflation pretty much top out. In fact, the last month, we saw the core inflation, excluding volatile energy and food, actually decrease by 0.2 of a percentage point. Now, that doesn't mean that it's not going to go back up a little bit, but I think we've pretty much seen the top of that market. So, all in all, I believe that the fundamentals are really pointing towards staying the course with what we are doing. We don't believe that in the long run, the valuations are going to significantly change. We believe that in the next year or two, we will see this market level out. We also believe that the economy is going to show the effects of the increase in the interest rates, which will then cause things to slow down, which means the Fed will likewise lower the interest rates back down. So again, if you're looking for a low risk opportunity for long-term cash flow, I really believe that the multifamily space is a great opportunity right now. Again, I understand there's a lot of fear. and folks are having trouble kind of navigating that situation. But I really believe the opportunity right now is a little unique. And we'll talk about that tomorrow. If you want to join us on the webinar, we'd love to have you. We'll talk about some of the metrics that we're seeing on this property in San Antonio. Also happy to share a little bit more about the Avenue 33 deal. Feel free to reach out to me, Robert at REM Capital, and set up a call. Always love to chat. But anyway, so hope you have a great week, and thanks for watching. We'll talk soon, hopefully. Take care. Thanks.